Hello, everyone. Welcome to the market opening bell on Thursday, October 16th, your 10-minute guide to the stock market. The Shanghai Composite Index reclaimed the 3,900 point level, while the Hang Seng Index snapped a 7-day losing streak, opening to 273 points higher. The gains later narrowed to 152 points, reaching 25,593 before expanding to 540 points at 25,982 in late trading, ultimately closing up 469 points or 1.8% at 25,910. The Hang Seng China Enterprises Index rose 171 points or 1.9% to 9,250, and the Hang Seng Tech Index climbed 152 points or 2.8% to 6,075. Total market turnover reached 315.8 billion Hong Kong dollars. Southbound funds recorded a net sell-off of Hong Kong stocks worth $5.443 billion, with the following highlights. Net buys included Alibaba at 857 million, Hua Hong Semiconductor at 445 million, Xiaomi at 296 million, Tencent at 250 million, PopMart at 204 million, Sanhua Intelligent Controls at 163 million, and CSOP Hang Seng Tech Index ETF at 145 million. Net sales included Tracker Fund at 8.575 billion Hong Kong dollars, Hang Seng China Enterprises Index ETF at 3.338 billion dollars, and SMIC at $642 million. Statistics show that southbound funds have net bought Xiaomi for 8 consecutive days, totaling 5.928 billion Hong Kong dollars, while reducing holdings in the SMIC for 5 consecutive days, totaling 7.229 billion. Technically, the Hang Seng Index remains volatile, with resistance levels at 26,100 and 26,250, and a major resistance at 26,500, where the 10-day and 20-day moving averages are currently positioned. The short-term support level is at 25,600. China's Asia market saw the 3 major indexes open higher, stabilize with fluctuations, and regain upward momentum in the afternoon. The Shanghai Composite Index closed at its daily high of 3,912, up 46 points or 1.2%. The Shenzhen Component Index closed near its high at 13,118, up 223 points or 1.7%, and the Chinex Index closed near its high at 3,025, up 69 points or 2.4%. Total turnover in Shanghai and Shenzhen markets reached 2.0715 trillion yuan. The renminbi US dollar central parity rate was raised by 26 points to 7.0995. Data from the National Bureau of Statistics showed that in September 2025, the National Consumer Price Index fell 0.3% year-on-year, exceeding market expectations of a 0.2% decline. Core CPI, excluding food and energy prices, rose 1% year-on-year, marking the 5th consecutive month of increasing gains and the first time in 19 months that the rise reached 1%. For the first 3 quarters of 2025, the national CPI averaged a 0.1% decline compared to the previous year. The producer price index remained flat month-on-month for 2 consecutive months, while the year-on-year decline was 2.3% in line with expectations, but narrowing by 0.6 percentage points from the previous month. The People's Bank of China reported that new renminbi loans for the first 3 quarters totaled 14.75 trillion yuan. This implies September's new loans reached 1.29 trillion yuan, below the market's median forecast of 1.47 trillion yuan, but significantly higher than August's 590 billion yuan. Social financing scale increments for the first 3 quarters total 30.09 trillion yuan, up 4.42 trillion yuan from the previous year and exceeding market expectations of 29.91 trillion. September social financing increment was 3.53 trillion yuan, surpassing expectations. By the end of September, broad money M2 grew 8.4% year-on-year, slightly below the expected 8.5%, while narrow money M1 grew 7.2% above the expected 6.1%. Currency in circulation M0 increased 11.5% year-on-year, with China's September CPI falling 0.3% year-on-year, exceeding the expected 0.2% drop. Premier Li Qiang recently emphasized the need to continuously expand domestic demand and create new growth points for it. New consumption stocks topped the F4 surged. PopMart jumped 3.8% to $273. Mi rose 6.6%. Mao soared 9.7%. Laopu Gold climbed 9.2%. Alibaba's e-commerce platform Tmall kicked off its Double 11 event on Wednesday at 8 p.m. This year's Tmall Double 11 offers an 85% official discount. This year's Tmall Double 11 offers an 15% official discount, supplemented by 10% off consumption vouchers, category-specific coupons, and shopping credits. Auto stocks rallied, with GAC Group 2238 surging nearly 10%. Reports indicate GAC will launch a new national car in November alongside JD.com and CATL with an estimated price range of 100,000 to 120,000 yuan. The model is expected to adopt chocolate battery swap system, likely for JAC Iron's battery swapping vehicles. JD.com clarified that the collaboration focuses on consumer insights and exclusive sales, with JD not directly involved in manufacturing. The three major airline stocks soared, with China Eastern Airlines up 9.3%, Air China up 7.4%, and China Southern Airlines up nearly 8%. September saw improved civil aviation demand, driving a year-on-year recovery in ticket prices. According to flight steward data, the average economy class fare, including fuel surcharges, for weeks 36 to 39, September 1st to 28th, rose 1.5% year-on-year, compared to a 6.5% drop during the summer peak. Passenger traffic during the Mid-Autumn and National Day holidays grew 3.3% year-on-year, slower than the 11.8% during the May Day holiday. But average ticket prices, including fuel surcharges, rose 0.3%, showing stable performance. Looking ahead, with low supply growth and industry shift away from over-competition and a low base effect, profitability is expected to continue recovering in Q4. Hotel delivery robot company Yunji, stock code 2670, will list today. Yesterday's grey market trading on Phillip Mart closed at 141.1 Hong Kong dollars. 47.6 or $45.5 above the IPO price. Excluding fees, a 50 share lot will yield a paper profit of $2,275. U.S. Treasury Secretary Bessent emphasized on Wednesday that the U.S. will not alter its stance on trade negotiations with China due to stock market fluctuations, nor will it shy away from taking tough measures against China. The VIX Fear Index rose to 20.6 in late trading, nearing last Friday's high of 21.6, marking its highest level since late May. U.S. stock indexes showed mixed performance. The S&P 500 rose 26 points or 0.4%, closing at 6,671. The Nasdaq gained 148 points or 0.7%, closing at 22,670, while the Dow fell 17 points, closing at 46,253. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, climbed 138 points or 1.7% to 8,252. Tech stocks also showed mixed results. Nvidia lost its earlier gain of up to 2.7%, closing down 0.1%. Tesla staged the recovery, rising 1.4%. Morgan Stanley reported a 45% year-on-year increase in third quarter net profit to $4.61 billion, with earnings per share at $2.8, surpassing expectations of $2.1. Revenue grew 18% to $18.22 billion, a record high, exceeding forecast of $16.7 billion. Equity trading revenue surged 35% to $4.12 billion, well above expectations. Fixed income trading revenue rose 8% to $2.17 billion, in line with estimates. Investment banking revenue jumped 44% to $2.11 billion, also beating expectations. Wealth management revenue increased 13% to $8.23 billion, exceeding forecast. The stock rose 4.7%. Bank of America reported a 23% year-on-year increase in third quarter net profit to $8.5 billion, with earnings per share at $1.06, stop, topping market expectations of $0.95. Revenue grew 10.8% to $28.24 billion, beating estimates of $27.5 billion. Investment banking revenue soared 43% to $2 billion, while equity trading revenue rose 14% to $2.3 billion, both exceeding expectations. Net interest income increased 9% to $15.39 billion, about $150 million above forecast. The stock gained 4.4%. The Federal Reserve's latest beige book released Wednesday indicated little change in U.S. economic activity in recent weeks, with employment levels remaining broadly stable. The report noted a slight decline in overall consumer spending, while prices continue to rise. Multiple regions reported widespread increases in input costs due to tariffs, though the extent to which these were passed on to final prices varied. Some businesses chose not to adjust prices to retain customers, while others fully passed on high input costs to consumers. Additionally, the New York Fed's manufacturing index rose 19.4 points to 10.7 in October, marking its third positive reading in 4 months and exceeding market expectations of -1. Businesses expressed greater optimism about the near-term outlook, with nearly half of the surveyed firms anticipating improvement in the coming months. Our stock pick today is New China Life Insurance, stock code 1336. New China Life Insurance issued a positive profit alert, projecting a net profit attributable to shareholders for the first 3 quarters of 2025 to range between 29.986 billion yuan and 34.122 billion yuan. This represents an expected increase of 9.306 billion to 13.442 billion yuan compared to the same period in 2024, reflecting a year-on-year growth of 45% to 65%. The significant rise is primarily driven by strengthened institutional operations and enhanced independent management capabilities of its workforce, with comprehensive improvements across product offerings, services, team development, ecosystem integration, technology, and operations. The company has accelerated its transformation toward dividend-paying insurance products and firmly pursued a path of high-quality intrinsic growth. Additionally, it benefited from continuous optimization of its asset allocation, increasing investments in high-quality assets capable of withstanding low interest rate challenges to solidify long-term returns. Coupled with a stabilizing and improving Chinese capital market in the first 3 quarters, investment income continued to grow substantially year-on-year, building on the high growth achieved in the same period last year. In product development, the group has adopted the goal of best products come from NCI, New China Insurance, strengthening the supply of diversified insurance products and enhancing its inclusive insurance system. It continues to enrich its all excellent precise product lineup tailored to customers' full life cycle needs encompassing birth, aging, illness, death, and disability. With customer segmentation as the core, the company has built an integrated insurance plus service ecosystem model. In terms of services, the group has accelerated the development of its service ecosystem, focusing on building service brands such as Xinhua Zun, Xinhua An, Xinhua Rui, and Xinhua Yue. It has integrated high-quality internal and external medical resources to provide customers with comprehensive health management services, covering disease prevention, medical assistance, and overseas healthcare. Its global medical network has expanded to 40 international hospitals, effectively supporting customers' demand for premium global healthcare resources. On the workforce front, the group continues to advance the strategic implementation of its Xin Generation Plan, strongly promoting the transformation of its marketing team toward professionalism and career orientation. In the first half of the year, it added nearly 20,000 new staff, a 182% increase year on year, while stabilizing and expanding its workforce scale. Per capita productivity rose 74% year on year, significantly boosting team income. In terms of technology empowerment, the company has continued to enhance data-driven operations in customer management, market analysis, product design, and risk prevention, with intelligent customer service accounting for 78% of interactions. It has strengthened intelligent claims processing, with real-time claim payouts increasing by over 10 percentage points. Additionally, it completed the private deployment of the DeepSeek large-scale model, rapidly scaling up its proprietary computing power. By leveraging AI to support investment research, the company has developed the Da Shi Zhi AI assistant brand matrix, advancing its business toward high-level intelligent collaboration. Recommended buy price 51 Hong Kong dollars, target price $55.5, stop loss $48.5. I do not hold the aforementioned stock.